Welcome back to Trades and Gains, folks. I'm your host, Max Pitts, and welcome back, ya legends. The party might not be over, but someone just hit pause on the aux cable. Moody's who? That was last week. This week, it's all about the markets realizing that maybe, just maybe, rate cuts aren't free. Tariffs are still stuck, and Peloton just got juiced harder than your Gym X. Let's unpack the madness. No fluff, just fun here. Now, let's kick things off with our market snapshot. The S&P 500 snapped its 6-day bender. The S&P 500 lost 0.39% today. The Dow was down 0.27%, and the NASDAQ lost 0.4% on the day as well. After 6 straight days of green, the market finally sobered up. Traders realized, hey, tariffs, inflation, debt, maybe not vibes only after all. Now, we had some more news as well with the tariff truce, but it was more like a timeout. Trump's 90-day tariff pause got cheers last week, but this week, Fed's Musalam, tariffs are still posing a significant risk. Jamie Dimon says markets are complacent, and the translation for that is put the champagne down because you're celebrating a little too early there, friends. The long of the short of it, this isn't a deal. It's straight up a delay at this point. Now, what happened on our earnings front? One big name, Home Depot, they missed. Is home improvement just home depression at this point? Home Depot missed on profits and same-store sales as tariffs ripple starts hitting home improvement budgets. Home Depot was down 1% after weak earnings, and they blamed smaller projects on that. Retail budgets aren't shrinking, but Home Depot says they won't raise prices. We'll believe it when paint doesn't cost $60 a can, by the way, guys. So good luck getting that one past us. But that is a positive sign because many retailers are increasing their prices to pass along those costs onto the consumers. Now, some stocks that were on the move today. We had Warby Parker up 15% after unveiling AI-powered smart glasses with Google. The irony, Google dropped 1% on the same news, but then again, that's because that Google I.O. was just an absolute disaster. They had freezes, glitches, all during a live show as well, showing off new products and new functionality. Not a great sign or vote of confidence for that matter. AI innovation is cool, but investors want cash and not a cool factor. Now, some yields, they're in dangerous zones right now. The 10 years at 4.52% and the 30 years at 4.97%. That 5% ceiling's looking very much real. Citi warns above 5% on the 30-year equals sell America moment. Sprinkle in Trump's tax bill and fiscal fears, and you have a hot mess express here. Now, some of our watch list for today, we have SPY and QQQ with repricing risk real. We have Home Depot and Target, retails in the splash zone, Warby Parker and Google, AI flex versus fundamentals, Tesla, Musk is staying CEO, which equals emotional support stock, and Bitcoin and coin, stablecoin bill passed the Senate, and bullish crypto vibes all throughout. The rally's not dead, but it's getting real twitchy. One headline could absolutely send this thing spiraling out of control. Now let's go ahead and head over to Investor Central Club, where we can see some of our flow for today. And by the way, if you use that code 130, you can get your first month for only $30. That's one of the best deals we've ever run. If you missed the 125, here's your chance to take advantage of it. But let's go ahead and talk about what happened in Investor Central Club today. In QQQ, we saw 24.7 million in flow, split between calls and puts, hedging for the Fed mood swings apparently. The $640 call for January 26th had 1.9 million dumped into it, and that is absolutely a tech moonshot bet. SPY saw 31.3 million in mostly puts. Recession PTSD is activated. GLD saw 8.3 million in inflow. Gold's back like it's 2011 all over again. IWM had 10 million flow, split like a Thanksgiving dinner politics. And Meta had the mega put. Meta It saw about 9.8 million in flow today, with 8.79 million going into puts, with 1.1 million going into calls. Granted, one of our most hit contracts were that Meta call, as we can see up here, due for this week, actually. So a very aggressive timetable. 1.15 million dropped on that at about 1:35 p.m. today. Now, if we also look over here, we can see people have been selling Meta this week. So that is also a concern. So is there something that they know that we don't potentially? Now, some single stock activity we saw. Tesla saw 35.5 million in bullish flows. Elon equals, well, he's still cooking apparently. Nvidia had 11.7 million in call flows. AI chip addiction is absolutely living on. United Healthcare saw $10 million mixed. Someone's definitely bullish or someone's panicking. FSLR saw 8.2 million in calls. And solar's not just dead yet. And Google also saw $6.8 million nibble. That might be the AI backend bet. Meta, did we mention? Did we mention the heavy amount of money in puts? We have 11.8 million on the $600 strike, expiring 1/16/2026. So that it could be a little bit intimidating there. Now, some unusual options activity that we saw within the markets today. Let's go ahead and talk about that. We saw Peloton absolutely get pumped. 1.09 million in the $7 calls for July of 2025. We called those out on Twitter. They're currently up about 56% right now. So those have been some solid movers for us so far. We also had Nvidia with 11.7 million in call flow overall. MGNI, small cap ad tech play, got 478K in calls. Was this a ghost trade? CORZ saw 115K YOLO on a 335% IV spike. This is not a drill. Pfizer saw 95K in puts. Someone's not vibing with Pfizer's pipeline. And HAL, or I think Halliburton, 94.5K in bearish flow. Is oil the next dip? It could be, based on the news we saw yesterday with that Iranian oil deal. Now, TSLA, leveraged Tesla ETF, is getting some spicy bets as well. Now, let's go ahead and talk about some of our dark pools as well here. It was really ETF heavy today, if we're being honest. IVV had 3.8 billion in copy paste prints. Is this a rebalance or a ritual? EFV saw 1.4 billion. Nobody watches it. Someone just bet big though. THRO saw 1.4 billion at 34.18. What even is that? And QQQ saw 391 million before the squeeze, insider level timing. Now, this week's drop wasn't a panic. It was a reminder. Tariffs are absolutely still toxic, boys. Yields are still climbing. Peloton's flow is the wildest thing we've seen since the meme stock summer. Meta is getting buried alive in bearish bets, and smart money is moving. Are you watching, though? Like, comment your top trade, and subscribe if you're tired of CNBC bedtime stories. We'll be here tomorrow with more market madness. Stay sharp, stay smart, stay spicy, my friends. I'll see you in the next one.